When I first started out as a trader, I cannot tell you the amount of dumb mistakes I made. 6 years in my trading journey, I like to think that I'm somewhat well versed in the space. In this video, I'm going to show you exactly what mistakes I would avoid to fast track my success as a trader if I were to do it all over again. First one is simply going to be over trading. Now, this is a massive problem that a lot of traders have when they first started. When I first started, it was a massive issue for me. I remember the first broker I was penny stock trading. I had $1,000 in the account, and the first day that I was trading, I ended up taking 12 different trades on that one day, which is way too many trades. I didn't have a plan, I didn't have a strategy, and I was simply trading based off emotion. If you're really talking about what a good setup looks like, it shouldn't happen multiple times throughout the day. So if you're trading 3 to 4 setups every single day, you may want to reconsider what your strategy actually looks like. There isn't a limit on the amount of trades you should be taking a day or even a week or per month. I know a lot of traders that trade once a month, they still end up making millions because their setup is so clearly defined that they have a very high success rate. Now, if you get in the habit of over trading or revenge trading, which is very common for a lot of traders, you can blow up your account pretty quickly. A lot of the times, especially when I first started trading, I would take 1 or 2 trades, end up on the day red, and I would try and revenge trade to make my money back so I could be green on the day. Nobody likes finishing the day red. You need to be okay with taking days and taking losers and not having the ability to try and fight your way back to become green on the day. One tip that you can use to help yourself from over trading is simply by making a set of trading rules. Now, if I pull up the screen share here, you can see that we can go ahead and make a set of rules right now, something just a basic template that you can use. For example, one of them may be take no more than 3 trades a day. That way, you're going to prevent yourself from over trading simply by having these rules in place. You could also make one that says, after you have 2 losing trades in a row, stop trading, right? Another one may be for a max gain. So in this case, it could be, once I'm up, we'll say like $300, for example, on the day, stop trading, okay? By having this and allowing yourself to make a list of rules that you can stick to, you're going to have a much better time actually not over trading and being a lot more consistent with your result. The next thing is simply going to be journaling your trades. Now, the reason why this is so important is because actually being able to physically see yourself and see what your trading looks like is going to make a huge difference than just hearing it or seeing it on paper. One last thing to touch on this over trading topic is that you simply don't want to set trading goals. I think in most areas of your life, they are important, but with trading, you don't want to set any goal. Here's why. When you set trading goals, like maybe you want to make $500 this week, you tend to overtrade and force yourself to try and reach those goals. The biggest part when it comes to trading is that it's all about opportunity. You only want to take trades when the opportunity presents itself. Some weeks, you're going to see a lot of opportunities. Some weeks, you may not see any. And if you have these goals in mind, you're just mentally forcing yourself to try and reach them, and that's going to cause you to overtrade. Now, the second mistake that you want to avoid is trading without a strategy. This is very common when it comes to traders. It's a huge reason why a lot of them fail. Trading with a strategy is essential, that you make sure you have an edge in the market. One of the biggest mistakes that traders make is that they tend to buy high and sell low, which sounds crazy because we all know you're supposed to buy low and sell high. But the reason behind that is because a breakout is a very common strategy when it comes to trading. We're taking a look at Airbnb here. You can see if we have this consolidation phase right here, very common for a lot of traders to say, once price is in a consolidation phase, we wait for the breakout and then buy all the way when price is at the top, all the way up here. Now, sometimes the strategy can work. A lot of times it will. But what's important is that you're able to back test it and make sure you have proper risk management in place. For example, let's say you were trading the same thing on Airbnb. You see that this was your setup here, and you decide to buy the breakout when price is all the way up here. And if you don't have proper risk management in place, you don't know where to set a stop loss or set a proper target, you can get in here. This price comes back down, you don't know when to get out, and it keeps going lower and lower and lower. And then you end up losing a lot more than you actually wanted to lose in the first place. Another very common strategy that a lot of traders will use is support and resistance. Now, if we take a look at Airbnb, you can see we have this area here. It's a very clear resistance line, right? Topped out here, topped out here, topped out right here. And you can see, if we zoom out a little bit as well, we have a nice little support area here at $90, right? We bottomed here, came back down, we bounced, came back down, we bounced. The thing that's important when having a strategy is you always have proper risk management in place. That means you always have a stop and a target in place for every trade. If you're looking at Airbnb, let's say you bought down here at this, this support zone at around $90, and then price ends up going below it, right? you want to make sure that you have your stops in a logical place. If I put my stop all the way down here, then the risk reward isn't going to be that great. Now, if you're also just simply trading based off support resistance or whatever you think that price is going to do, then you're not really giving yourself a big advantage. When it comes to trading, you need to have a strategy that is back tested and proven to work. That means if I'm looking to buy here, then I need to know exactly where my stop is going to be, where my target's going to be, and why my stop and why my target are going to be in those specific areas. If you're simply buying because price is just at a support zone, that is not trading with a strategy. That is simply gambling. And it's very common for a lot of traders to fall into that. Now, a few different tips that you're going to want to use when it comes to placing your trades and managing your execution, simply going to be by setting automated orders. These are simply trades that I love to do because they work extremely well and it takes the emotion out of your trade. So let's say, for example, our plan on Airbnb, if we're looking at this chart right here, is to get in when price comes back down to this demand zone at 133. Let's say our stop is going to be at 122 and our target is going to be all-time highs up here at 154. That is a very good plan to have. But a lot of times, we may see price do something like this. Price comes down, we get in when it hits our entry, and then end up going really close to our stop, and we're about to get stopped out, so we get nervous and we exit early to have a little bit less of a loss than we imagine. And then price ends up going all the way to our target. This can happen a lot of the times, and that's why it's really important. When you have a strategy that works, you stick to it. While the price is all the way up here at 147, I can set an alert on my broker where when price comes down to 134, I'm going to buy. And if price gets down to 123, I'm going to sell for a loss. And if it gets up to 155, 156, I'm going to sell for a gain. And this is very advantageous because you can do this without even having to look at the charts. I could set this order right now, walk away, never to look at Airbnb. I'm going to know exactly how much money I'm either going to lose or make for that trade. Now, a huge mistake that a lot of traders make when it comes to trading is having emotions involved. One of the most common ones that you hear or see is going to be FOMO, which stands for the fear of missing out. A lot of times you're going to see something like, look at Airbnb, for example, prices going up and up and up. And let's say, for example, previously, let's say you wanted to get in right around here. And you're waiting for a pullback, but that pullback never comes. And as price keeps going up and up and up, you're like, wow, I really missed that move. I missed a really good trade. And so instead of waiting for your entry, what you end up doing is you get FOMO. You think the move is going to happen without you. So you end up buying all the way up here, or maybe you end up buying all the way up here when you originally planned to get in all the way down here. And doing this is a massive mistake, but it's very common because you may be very certain on a specific trade. And if you don't get into that trade and the price starts going without you, you're going to get a lot of FOMO. And it's important that you're able to get rid of that FOMO and not care if price doesn't hit your entry or not, or if it just runs without you. One cool thing that you could have with managing emotions is what we call an accountability buddy. Having someone in your back corner, kind of like a coach, someone who can tell you when to stop revenge trading, when you're getting a little crazy with your emotions, going to make it a lot easier for you to be set in reality when it comes to your trading. Now, if you're interested in joining a community and becoming a successful trader, having your own accountability buddy yourself, you can go ahead and click the first link in the description below. I made a free training for you guys. You can go ahead and check that out, and it's going to help you become a successful trader just with that training on its own. After watching this video, I hope you learned some of the mistakes and you can help avoid them for yourself when it comes to trading. If you like this one, make sure to subscribe, turn on the bell so you go ahead and don't miss any of my other videos. I'll see you guys in the next video.